Good evening, everyone. This video is going to be a trading review for November the 2nd, 2022. So today was FOMC day. So I had the stated goal of under trading, and I wanted to even wait for a while to trade, but then my finger kind of got ahead of me, and so I took some trades. And took a couple of trades before 7 and then one trade after 7. So let me kind of walk through these trades, and I'll tell you one thing, because it's kind of hard to see. I mean, it's not too hard to see on my chart because I've made a little bit of adjustment, and I'm going to show you what I did. I just truncated this time that we show the caution bars. And so, because here's my entry, first entry here, and it was clearly in the direction of the trend and had broken through the mid S1 level, and I got out prior to. No, actually, I got out right at yesterday's low. So that was a good first trade. But let me just go ahead and show you what I've done on the time marker. And I certainly don't want to trade too early, but if I was looking at this, I think the bars are difficult to see. So I'm going to go ahead and adjust the time marker, and I'll pull it up here so it's on the video. And I think this is it. Oh no, just a second. Caution length. Yeah, I'm going to go set that at 1, which is what I have. Let's see if that changes it. Yeah, that changed it. So I pretty much do want to stay out of the market in that first minute. I can see a little bit, but I mean, if once it gets into these magenta on red, it's it's pretty difficult to see. So that's what I did. I'll go ahead and leave it at that. We could talk about it again. We'll talk about it tomorrow morning. It's still overall a pretty risky time of day, even beyond 1 minute. So you definitely kind of want to watch for the fake outs, that kind of stuff, and then to see which way it is breaking and if it continues to break. So that was the first. So that's the first trade, 1.5 points, and then it's kind of a light volume day, and didn't really know how much it was going to continue. So again, my goal here is to under trade, but I really kind of pushed this one after I certainly looked at it. Now it is coming back up to yesterday's low. Right, that's a good thing. It's still underneath slow flex. It's still underneath the EMA. Those are all good things. But I did kind of push it. It is kind of a big push. Here it could have just as easily worked. I mean, and it eventually would have worked, but it wasn't just quite ready just yet. A test of this test is much better, right? As it's coming back up to the EMA, and even yesterday's low, right, fails to really continue to break out there, doesn't even attempt to come back up to the open yet. It's still a bit early for that to happen. So I actually added to it. This is the level that I added to it, and I was out there. Now ultimately, if I it would have been out, even if I hadn't have added to it, I would have been out over here anyway. But anyway, added to it, got out faster. Now, I said I'd talk a little bit about my mentality here with stops, and it kind of depends on what kind of a trader you want to be. If you want to have a 3-point stop, and there's nothing wrong with that, you really have to be pretty doggone cautious about the trade that you're going to get. Even on like a day like today, we got 3-point pullbacks, and so so this one, these, as it's breaking down underneath everything, right? That one was pretty good, But other than that, some of these things I'm totally right in the direction, and the 3 point stop kind of gets me, and then it continues to do that. So what I'm doing, this is for me, right? I'm initially using a 5 point stop, right? And then once I enter into a trade, I look to see where that stop is, right? And I mean, for instance, if I made a mistake and that kind of stuff, and I entered too far down, and that's possible, if the stop is prior to the EMA or something like that, I probably am going to play with that stop a little bit, assuming that I'm not, doing something silly like trading right around news time when it can reverse or something like that. Not trading, and I don't get any upward expansions. So I might continue to try to play with that. It's working out pretty well. I have no intention of just like letting it go and go and go and go, like we did at one point in time. Now we were pretty consistently profitable back then, but every now and then we'd have a real challenging day. And I'm not really into real challenging days, but I also don't want to necessarily come back from 3 point stops when I'm on the right side of the market and the right trending side of the market. So everybody's going to have to make their decision here a little bit. Maybe I'll talk about that a little bit more in the morning. So I'm initially throwing a 5 point stop. I know the risk to reward scenario doesn't sound very good, right? But I'm trying to increase, and I am. I'm increasing the number of winning trades by playing with it a little bit. Not nearly as much as I used to. Don't want to do that. But especially on an FOMC day like today, right? I mean, I played with two, and then I got done pretty early. The next one, I mean, and the volume was low. My goal today was to under trade. I didn't want to push it. I waited till we were after 7 o'clock, and I did have something of a negative bias. And I don't want to trade bias too much, and so I kind of did the same thing here, right? Here's 7 o'clock, right? It tried to recover, right, but only got up into the fast zone, right? And it's kind of rejecting the fast zone. It's coming down. So I am under the EMA, but I'm into the linear regressions, the fast and the slow flex. So that's not the best trade in the world. EMA had just got through stepping up, right? So that's not the best trade in the world. So it came back up into the fast zone. I added to it before the end of this, right? Because it looked like it was going to be a lower high. And it didn't quite get me out, right? Remember I was saying I needed just a little bit more, needed something down here, right? In the EMA and the 3 minute close could have held. It could have broken through and got me out here, but it didn't. So this is when it didn't necessarily feel too good, right? So now I have two. I'm carrying, one here and one here, right? Just gets to the top of the fast zone, and I get some downward volume here, so that I added a third, right? And I'm also kind of watching it pretty closely now as well, because it also had broken out, as you can see, it also had broken out of the 5 minute high. So I'm really looking at it closely here, and so ultimately it did come down, and I was out in this range, right? And at that point, I had three, but I got a gross 1.5 points in that, and on an FOMC day, that was really enough. So I need to watch. I need to make sure I don't get into the point, because before, if when I was thinking, well, I could trade out of anything, I don't want to get it back into that mindset, and I'm still kind of playing with the leverage. So at one point, I was going to kind of press the leverage in the account, meaning the number of contracts per dollars in the account and that kind of stuff. And these 3 point stops were enough that I want to. I have reconsidered that. So I have reduced the leverage that I want to use, and I'm going to use this for maybe a month ago so and see how that feels. Right now, the leverage that I'm using and the stops and the adding on when I have to or need to feels okay. I haven't had a real challenging trade yet, so I'll wait to see if I have one of those. But I also am stopping with pretty good reasonable profits, even though some trades are still available later on the day. Now today, I had 4 3/4 points, and on an FOMC day, I was fine with that. And so you see the market never really. I mean, here maybe right would have been okay, maybe right, but then it's just really not doing too much, right? And we're all the way into 7:30. I was wondering, if we got to 7:30, if the market was going to try to turn around, and ultimately it kind of did, as you can see. But does that look like a good turnaround? It looks like a whole bunch of noise to me, and that's kind of what FOMC days sometimes are. It starts to look a little bit better here after it gets over everything, but as you can see, it really still wasn't, very good. So I like this new kind of mindset. I mean, FOMC days, I'm just not going to trade very much. If I get, a few points, today was fine. If I get a few points, I'll probably just not trade and let the FOMC day go, unless it's really doing something spectacular. And here it's kind of breaking down again. Through the rolling low, and so there maybe were some other trades available, and I said it would probably trend later on in the day, and ultimately it did. Let's see. This is, I don't like any of these, but ultimately, see this is this is 9 after 9, right? And much more selling going on, right? Expansion, 2-bar combinations, expansion. EMA stepping down. We're underneath everything after pretty good alignment and running away from, right? Running away from something is important. Running away from the volume point of control, the minute average, the 2x20. So that was a pretty good roll down there, right? So that one was tradable. These, especially on FOMC day, again, it starts to be more questionable. So you just have to, here, I mean, I don't really like to sell and or buy into all session lows or all session highs. But again, we have some fairly consistent selling going on. So I just wanted to cover some of that, on what that looked like on an FOMC day. Ultimately, the FOMC committee kind of did exactly what they said they were going to do. No big surprises. They raised the overnight rate 75 basis points, like they said they were going to do. Powell in the post-conference, I listened to some of it in the post-conference meeting that they had. He's kind of saying inflation is kind of ugly and it's kind of hanging in there. They are seeing some signs of slowdowns. But as was kind of questioned and he answered, a lot of the inflation is coming from energy and food, and interest rates don't directly affect energy and food, and some of that is the war that's going on affecting energy and all those sorts of things. So he's not necessarily predicting that the inflation is going to go away quickly. Right, there are future interest rate increases coming, and he reemphasized that we just may be here for a while. He also mentioned about the chances of a soft landing. I think he used a reporter was asking the question, and he used the word it has narrowed, right, and the probability of a soft landing has decreased. So, let's take a look at, and the markets are down. Let's just take a look and see where we ended. All right, so we ended down, right? We did not hit, the 20-day moving average, scared it, right? I think we got within about 10 points of it with well, maybe 12 in the overnight session, right? So you can see the overnight session has come down. 20-day moving average is flattened out, right? So tomorrow will be an interesting day. It's the third down day, down. So it's trying to be up a little bit as we speak, but as you can see, it's a very narrow range. So tomorrow might be interesting. We'll see what the volume is going to do. See if it's going to hang around here in a narrow range overnight and or trend overnight and potentially break out one direction or another. But I don't think the news was, the conference was that encouraging in terms of what it's going to be doing. All right, so that was kind of the results for today, and we'll wait and see what the volume looks like tomorrow, and see how much we want to trade. All right, any questions on that? I either put you to sleep or you're typing, one of the two. Yeah. So I've adjusted it. I originally on the first couple of days I had the 3-point stop, and I would just move it or delete it, and then but that's one of, after you enter in a trade, that's one of the things that you have to do, right? And you maybe have to take your eyes off the chart a little bit, and so I decided to go ahead and go for 5 initially, right, and just see where that stop is, right, and compare that to the market action and see what I want to do. I'm trying not to add too soon. So the indicator is good enough that we've got the direction of the market fairly good, I think, right? We're not doing anything crazy, and of course, sometimes I'm a little bit more aggressive than others, and some of you are, you tell me, some of you tell me what trade you take, and some of you are pretty conservative. You really wait for that EMA hit, right, and take trades around the EMA, which is not bad. Some folks do that. They're fairly consistent, and if you do that, right, take trades relatively close to the EMA, then you're much more likely to be able to successfully use a 3-point stop. And everybody has to make that decision. I just know my finger a little bit, and my finger has gotten more disciplined, but I feel a little bit more comfortable in the trade, right, if I'm able to watch it and not be pressured a little bit. I still feel a little bit of pressure with that 3-point stop, and it's got me, as you know, right, it's gotten me several times when I was totally right about the direction of the market. Well, it just gives me a little bit of relief to know that I don't need, okay, so the 5-point stop gives me a little bit of mental relief that I don't need to adjust the stop right away, right? So I can see where, because it's on chart trading, right? I can see where that stop is relative to the indicators, right? And so if, and that gives me some room for it to, if I'm not right on the initial entry, gives it some room for it to pull back some, For instance, right? For instance, here, right? I can't remember where my stop was here if I had moved it, but I entered here, right? Right, and it gives me, let's see, this would have been 49, so 52, no, 48, so 3-point stop would have been 51, right? Would have been, so my stop would have been, let me see if I get this right. So I already said this was kind of an aggressive entry. So let's say it's at, let's see, let me see exactly what it was. It's 44.75. No, 48. Let me see. Yeah, 48.75. So 3 points would have been 175. Would have been right there. That would have been the 3-point stop, which would have been, just a little bit under this pivot, right? But I've got yesterday's low, the slow flex in the EMA behind me, right? So the 5-point got me up into the area, and I really, I saw it, right? So even my 5-point stop was going to be, let's see, what did I say? 875. 5-point was going to be 375. So 375 would have been actually pretty close, right in there, right? And I just don't want to stop out right around the EMA, right? Not when it has pushed down like this, right? And for it to go all the way back up, it would have really been a big crossing pattern, right? This would have been a big crossing pattern. And so I was willing to play with it a little bit more, right? So sure enough, the EMA held and down it comes. So I really need to, after I enter, I really need to look to see where that 5-point stop is to see if I'm going to play with it anymore. Did that answer your question? Yeah, in a relationship, specifically probably in an area like this where it really has come under the EMA, specifically would be looking to see where that stop is as it relates to the EMA. And here I had the EMA and yesterday's low as resistance areas, and you can see that resistance area still. Is that clear? Relatively clear? Yeah. I mean, I don't want to, throw contracts around. So I still do want to try to take pretty good entries, right? But I also don't want to have silly stops in terms of the area that the stop is in. All right, any other questions? Yeah, I think so. I mean, it feels better, right? A little bit, and feels a little bit better. Any other questions? Okay, great. All right, have a good evening, and hopefully we'll see you in the morning or very soon. All right, have a good night.